I want to have a quick conversation with you about anchor loans. Okay. Can you trust this lender this year? So this will be a review of the lender, and I'll talk about the pros and cons, the qualification process, but also the eligibility requirements. So let me first go back to anchor loans and explain to you what the lender does. So anchor loans is actually a very prominent fix and flip hard money lender in the real estate industry. So right off the bat, we have a specific niche, a specific segment, a specific economic sector. So you have fix and flip hard money lender, okay, in the real estate industry. And Anchor Loans actually is known for its strong relationships with builders and investors. So that means what? They are making sure that they have good relationship at every, let's say, at every angle. So builders, investors, homeowners. Okay. So one key advantage of choosing anchor loans is that they are able to provide fast closing times, which can be crucial in real estate transactions. Like if you're trying to really get a property real fast and you have the ability to secure a loan with anchor loans or another lender, you could actually this could mean you winning the deal. So this means that borrowers can secure the necessary real estate financing quickly, allowing you to proceed with your property investments without unnecessary delays, right? So anchor loans will be there for you to kind of help you out, to really support you, to really guide you, and making sure that you get the funding that you need real fast, okay? And anchor loans favorable terms make it a very attractive option for individuals seeking reliable funding for their fix and flip projects. So remember, hard money lending for fix and flip projects. Okay, so anchor loans actually started about around 1998, 1999. Okay, and so Steve Pollack actually started the company, and the company is actually headquartered in California. So it's been more than 30 years. I mean, nearly 40 years that they have been in business, and they have actually funded billions upon billions of dollars of transactions. So that's really good. So how does anchor loans really work? Let's have a conversation about that. So when it comes to anchor loans, you have fix and flip bridge loans, you have new construction loans, you have rental loans, you have fixed to rent loans, and you also have build to rent loans. So you have all categories of loans to really think about. Okay, so let me first talk to you about the fix and flip bridge loans. So this loans are used for 1 to 4 residential units. So you're going to need at least 1 to 4 residential units. Okay, loan amounts go from 50K all the way to $10 million. So this is really good. And in terms of repayment window, you're looking at 12 months. So that's 1 year, and the loan to cash up to 95%, and the interest can go from 9% to 12%. Okay, that's really cool. And anchor loans also charges 0.75 to 3% in terms of origination. So those are due at signing. Okay, so this lender flip and fix bridge loans provides short-term financing for a professional real estate investor to purchase, renovate, and sell properties for a profit. Okay, so they insist on the fact that you have to be a professional real estate investor. And this loans actually fund the acquisition and rehab of distressed properties, allowing investors to improve and resell the properties for a higher value quickly. Okay, and borrowers could potentially cover 100% of the rehab cost. So that's for fix and flip bridge loans. You also have new construction loans. So new construction loans are used for 2 to 4 residential units. Loan amounts go all the way to $10 million. The terms here, you have 12 to 18 months, and the interest goes from 9% to 12%, and they charge origination point that goes from 1.75% all the way to 2.75%. So you see the range right there. So new construction loans provide financing for real estate investors looking to build or renovate properties. So that's really good in terms of access funding access in terms of flexibility. And these loans are used to fund the acquisition of land, construction costs, and other expenses associated with new development projects. Okay. And you only pay interest on the funds you draw for constructions. So this is really good. In other words, you're not paying for the whole thing. You're not paying interest on the full amount. You're paying interest for the amount that you tap into. It's like a line of credit. Okay. So this is kind of cool. Next, you have rental loans. So rental loans is used. Those rental loans are used for 1 to 4 family properties, up to 20 properties per loan. And here, the loan amounts are a little lower. You're looking at $100,000 to $2 million, and the terms 30-year fixed or interest-only options. And the interest goes from 9% to 12%. So the rental loans are designed to provide financing for acquiring and renovating long-term, short-term, and vacation rental properties. And real estate investors commonly use these loans to fund the purchase and rehab of residential properties for rental income. And borrowers can use the funds to purchase, refinance, or cash out. So this is kind of cool. And you also have the fixed to rent loans. This is another category that Anchor Loans actually funds. So fixed to rent loans. So what's the fixed to rent loans for? Basically, these are used for long-term, short-term, and vacation rentals. The amount here you're looking at loan amounts $100,000 to $2 million. Terms up to 18 months for construction, up to 30 years for the rental phase. Okay, so again, this is a fixed to rent loan. So you have the fixing phase, which is the construction, and the renting phase that goes all the way to 30 years, and the LTC up to 92.5% on construction cost, and the LTV up to 75% for the rental phase. Okay, interest here 9% to 12%. So Anchor Loans actually offers a fixed to rent loans that provide financing for real estate investors to purchase and renovate properties with the intention of renting them out. So investors use these loans to acquire distressed properties, make necessary repairs or improvements, and convert them into rental properties for long-term income generation. You also have the last category, that's build to rent loans, and this is used for long-term, short-term, and vacation rentals. Loan amounts here $100,000 to $2 million. The terms up to 18 months for construction, up to 30 years for the rental phase. That's really good. And up to 80% on construction costs. That's the LTC. And the LTV up to 75% for the rental phase. And here again, the interest rates always goes from 9% to 12%. And this build to rent loans are actually specifically designed for real estate investors looking to finance the construction of rental properties. And these loans provide investors with the necessary capital to build and develop rental properties, allowing them to generate long-term rental income. So let me talk about the qualifications for Anchor Loans. So if you're interested in getting a loan from Anchor Loans, here are the qualifications. Now, the qualifications depend on the type of loan that you really want to secure with this lender, right? Because every Anchor Loans product has slightly different qualifications. Let me first talk to you about fix and flip. So for fix and flip loans, the minimum credit score is around 600 to 650. Experience 3 or more successful flips in the last 12 months. So they want to see that you have experience actually in the kind of stuff you want to do. Okay. Down payments really varies depending on your qualifications. So that's for fix and flip loans. What about new construction loans? The minimum credit score for those loans, 600 to 650, same thing. Experience 3 or more successful construction projects in the last 3 years. And the down payment varies depending on your qualifications also. And you also have rental loans. Rental loans, minimum credit score 660. Experienced at least 2 years of managing a rental property or a rental management company contract. So they want to see that you have some kind of proven pedigree. Okay. Rental information, you must provide rental information, rental income information for each property. and you got to have also some cash reserves. Okay, you should have cash reserves to cover short-term rental vacancies. You also have a fixed to rent. So minimum credit score here again 600 to 660. Experienced at least three successful construction projects in the last 3 years. So they want to see that. And also, you got to have some kind of the down payment varies depending on your qualifications, and so that's for the fixed to rent. Okay, and the final category you have a build to rent. The minimum credit score here again is kind of similar, 600 to 660. Experienced at least three successful construction projects in construction projects in the last 3 years, and the down payments also varies depending on your qualifications. So you can see that it always depends on your qualifications. So how do you apply for a loan at Anchor Loans? Well, the application process is pretty straightforward. I mean, nothing really complicated. Anchor Loans wants to make it easy for borrowers like you and me to actually get the loan that they need for their projects, right? Sometimes when it comes to real estate loans, speed is really quintessential. So Anchor Loans makes sure they're not wasting your time, they're not wasting their time too. Okay. So what you want to do is that with Anchor Loans, you want to complete the application. So if you are a potential borrower, you can complete the online application in about 10 minutes. 10 minutes, that's it. And what happens here is that you will provide information about yourself and your investor experience. You can also call Anchor Loans to apply over the phone, so they make it very easy for you to actually speak to someone and have a conversation about your projects, about the loans that you need, about the funds that you need. Okay, so that's step number one. You want to complete the application. Step number two, you want to provide information about your deal, and so here you have to provide like rental agreements, your current debts, and the transaction history. And but it's always important to speak to an Anchor Loans representative to have more information about anything. And if approved, you just received funding. So the loan originator will send a loan offer that includes the amount, interest rates, and terms. And your loan gets funded once you sign off on the loan documents and escrow is kind of ready. So those are things you need to really think about from the get-go. And post funding, basically, the Anchor Loans will provide valuable support throughout the closing process. Okay, and they will also make sure they set up the payment arrangement with your bank account so that every month you start making the payments. So that's really good. So what are the advantages of Anchor Loans here? So I just explained to you the fact that Anchor Loans is primarily in the real estate industry, and they focus on fix and flip, bridge loans, construction loans, rental loans, fixed to rent loans, and build to rent loans. Okay, so if you think about the advantages of Anchor Loans, of course you have speed, so you have quick approval and funding. You have also variety. You have flexibility, so flexible loan terms. You have competitive interest rates, and you have a streamlined application process. So basically, that streamlining is really important because it helps you actually get the funds real fast. Okay, so Anchor Loans is ideal for a real estate investor with a tight closing date when contemplating financing. And you can also benefit from personalized customer service and access to a wide range of loan products to meet your specific needs. Additionally, Anchor Loans has a strong reputation in the industry for reliability and transparency. So this is kind of cool from a scalability point of view. Okay, so this is really cool. So this is those are some of the advantages of Anchor Loans. What about the disadvantages? First of all, you have high interest rates. You saw a little earlier. I was just telling you the interest rate go from 9 to 12%. If you have good credit, you might think, well, this is too much, 9 to 12%. Okay, so this can make actually the loan more expensive in the long run. Additionally, strict eligibility requirements may make it very difficult for some borrowers to qualify for the loan in the first place. So this is something to really think about from a flexibility point of view. Okay. And the loan terms may also be less flexible than other lending options. And so this could actually limit your ability as a borrower to customize the repayment plan. Finally, anchor loans may have a limited geographic presence, meaning that the company may not be available in all areas. Okay, I mean, of course, they actually land across the board in the 50 states, but they still need to have experience with the specific location where you are at for them to actually trust in the process and really finance you. Okay, so if you think about anchor loans, pros and cons, pros, think about quick funding for real estate investments, flexible loan terms and options, competitive interest rates, and ability to finance non traditional properties. Cons, you have higher interest rates compared to traditional bank loans, shorter repayment periods that may lead to a higher monthly payments, strict eligibility criteria for borrowers, and also potential for higher fees and closing costs than traditional loans. So this is something to really think about from a flexibility point of view. So if you think about anchor loans, you need to understand this is a legit company. I already told you they've been in existence. They've been in operation since 1998. So that's nearly 40 years. Okay. So this is a legitimate and reputable lender in the real estate investment industry, not just real estate, but real estate investment industry. Okay. So the company has some ratings on Triple B, but also Trustpilot. Okay, and one thing I want to say here is that people love the fact that with anchor loans you have flexibility, but you also have speed. So you have a quick turnaround time. Okay, and they are able to fund loans promptly. Okay, and you also would have actually if you go through anchor loans, you would have personalized attention and support. Okay, especially when it comes to the application process, but it comes to the servicing of the loan also. Okay, so this is something to really think about if you are considering anchor loans this year. But one thing I also want to say is that just remember that anchor loans it's not cheap. Okay, 9 to 12% Okay, so do I recommend anchor loans? Definitely yes. If you are in that real estate investment space and you need quick funding, anchor loans could be the solution that you need. But just make sure that you read the fine prints pretty well and know exactly what you're getting yourself into. That way, you know whether or not anchor loans could be the right solution for you. Okay, and that this is an important element. And if for any reason anchor loans denies your application, remember that you always have options. So you have options. You can try to contact other lenders for your real, like if you want specifically real estate investment loans, contact other lenders in that space. Let me know in the comment section if you need more names. I can refer you to some names, or you can just get a regular loan, like a regular business loan, or a business line of credit, or actually you can get other types of business funding. So actually to power up your investments. So in conclusion to this conversation, I spoke to you about anchor loans. I gave you some information about the company. Okay, what kind of loans they provide, the qualifications, the how to apply. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.